Welcome to World Prism. Please subscribe and hit the bell icon for more breaking updates. In 2024, the BRICS group, originally Brazil, Russia, India, China, and South Africa, made a move that shook the global order. What began as a coalition of emerging economies has now evolved into a powerful force, determined to reshape the world's balance of power. By admitting Saudi Arabia and Qatar, two energy giants, BRICS signaled a dramatic shift away from Western dominance. These new members bring not only vast energy resources, but also significant financial influence and strategic weight to the table. This wasn't just about expanding membership, it was a strategic realignment, challenging the old centers of power. The inclusion of the Gulf states is a clear message. The Global South is ready to assert itself and demand a greater role in international affairs. With Saudi Arabia, Qatar, and Russia, BRICS now controls a massive share of the world's energy reserves, giving the bloc new leverage over global markets. This energy dominance allows BRICS to influence not just prices, but also the direction of future investments and partnerships. The expanded group can now coordinate on energy production, pricing, and crucially, the currencies used in trade. This opens the door to reducing the dominance of the US dollar in global energy transactions, a long-standing goal for many BRICS members. For the Gulf states, joining BRICS is a pragmatic step. China is now their biggest oil customer, and the future lies in the east. Their economies are increasingly tied to Asian markets, making this partnership both logical and necessary for long-term growth. Membership offers them economic benefits and greater political autonomy, reducing their dependence on the US. It also provides a platform to diversify their alliances and strengthen their negotiating position on the world stage. This move gives them a stronger voice in shaping the rules of the future international system. As part of BRICS, the Gulf states can now influence global governance and economic frameworks more directly. The Gulf's pivot is about becoming active architects of a new, more balanced global order. They are investing in infrastructure, technology, and new industries to secure their place in this changing landscape. The world is witnessing the rise of a multipolar system, with BRICS at its core. As more countries seek alternatives to traditional power structures, BRICS is emerging as a central hub for cooperation and innovation. The inclusion of the Gulf marks a turning point in global power dynamics, setting the stage for a future where influence is more widely shared and new voices help shape the international agenda. To grasp the Gulf's shift, we must understand the petrodollar system, the foundation of U.S. global dominance for decades. In the 1970s, the U.S. struck a deal with Saudi Arabia, military protection in exchange for oil priced exclusively in dollars. This forced every oil-importing nation to hold and use U.S. dollars, creating constant demand for the currency. The result, the U.S. could finance deficits by printing money, enjoying an exorbitant privilege no other nation had. The dollar's dominance gave Washington immense leverage, including the power to impose crippling financial sanctions. Global trade, debt, and reserves revolved around the dollar, cementing America's place at the top of the economic hierarchy. The petrodollar became both a currency and a symbol of U.S. power. Any challenge to this system is a direct challenge to the geopolitical status quo. The Gulf's recent moves threaten to upend this long-standing order. In 2024, Saudi Arabia and Qatar began accepting Chinese yuan for some oil sales, a seismic break from the petrodollar. This move marks a historic shift in the global energy market, challenging decades of US dollar dominance in oil transactions. The logic is clear. China is now the Gulf's largest oil customer, so trading in yuan streamlines business and deepens ties. For Gulf exporters, dealing directly in yuan reduces currency risk and transaction costs, making trade more efficient. Politically, this signals the Gulf's desire for more independence from the U.S., as relations have grown strained. The region is seeking to diversify its alliances and reduce reliance on any single global power. Embracing the yuan is a strategic assertion of sovereignty and a message to Washington. The Gulf has options. It's a clear sign that Gulf states are willing to explore new partnerships and assert their own interests. China, eager to reduce its vulnerability to U.S. sanctions, has pushed for the yuan's global use, building its own payment systems and swap lines. This effort is part of a broader strategy to internationalize the yuan and challenge the dollar's supremacy. Securing oil contracts in yuan is central to China's ambitions for its currency. It not only boosts the yuan's credibility, but also strengthens China's influence in global finance. For the Gulf, China offers investment and technology without political strings, an attractive alternative to the West. This pragmatic approach appeals to Gulf leaders seeking rapid modernization. As Saudi Arabia and Qatar pursue economic diversification, China becomes a vital partner in infrastructure, renewables, and AI. These sectors are crucial for the Gulf's vision of a post-oil future. Adopting the Yuan as part of a broader, deeper partnership reshaping the Middle East. It's not just about currency, it's about building a new economic and strategic landscape. The Gulf's eastward pivot is both economic and strategic, reflecting a new era of global realignment. This move is redefining alliances and the global energy landscape, with ripple effects that will be felt for years to come. Trading oil in Yuan directly challenges the petrodollar system and the US dollar's supremacy. For decades, the global oil market has been tightly linked to the dollar, reinforcing America's financial influence worldwide. Even if initial volumes are small, the symbolism is huge. It breaks a 50-year precedent. This move signals to the world that alternatives to the dollar are not only possible, but now being actively pursued. Other oil producers, especially those under Western sanctions, now have a model to follow. Countries previously isolated from the dollar system may find new opportunities to participate in global trade. As more trade shifts to other currencies, global demand for dollars could slowly erode. This gradual change could have far-reaching effects on international finance and trade relationships. Central banks may diversify reserves, reducing U.S. Treasury holdings and increasing yuan assets. Such shifts could alter the composition of global reserves and impact currency stability. This could raise U.S. borrowing costs and weaken the exorbitant privilege the U.S. has long enjoyed. The ability to borrow cheaply and run persistent deficits may no longer be guaranteed. The effectiveness of U.S. sanctions depends on dollar dominance. Alternative payment systems like China's CIPS threaten that power. As these systems grow, they offer countries new ways to bypass U.S. financial controls. The shift won't happen overnight, the dollar's role is deeply entrenched, but the Gulf's move is a crucial first step. It marks the beginning of a slow but significant transformation in global finance. The foundation of dollar dominance is no longer unbreakable. What once seemed permanent is now open to challenge and change. The trend toward a multipolar currency world has begun. More countries are exploring alternatives, and the financial landscape is becoming increasingly diverse. The Gulf's decision is a crack in the old order. It's a signal that the world is ready for change, and that the era of unquestioned dollar dominance may be drawing to a close. The global balance of power is starting to shift, and the world is watching closely as new financial alliances and rivalries take shape. The Gulf's move is part of a wider BRICS strategy to reduce reliance on the US dollar, de-dollarization. Russia and China have been cutting dollar reserves, boosting gold and other currencies for years. India now settles some oil trades in rupees or dirhams, while Brazil and China trade directly in their own currencies. These efforts, though facing challenges, show a clear political will to find alternatives. If BRICS members increasingly trade in local currencies, global capital flows and currency markets will shift. Oil markets could see new pricing systems and more diversified revenues for producers. De-dollarization unites BRICS, giving them a common cause and more influence in global finance. This is about more than money. It's about power and rewriting the rules of the global economy. The BRICS bloc is signaling that the era of dollar dominance is ending. India faces a complex balancing act in this new world. As a BRICS founder, India supports de-dollarization and trades oil in local currencies. Yet, it's also deepening ties with the US and Western allies, seeking strategic autonomy. The Gulf is vital to India's energy security and home to millions of Indian expatriates. India welcomes the Gulf's pivot to BRICS but is wary of China's growing influence in the region. Recent regional alliances, like Saudi Arabia's defense pact with Pakistan, add to the complexity. Still, economic interdependence keeps India-Gulf ties strong, with collaboration expanding beyond energy. India's strategy is multi-alignment, engaging both BRICS and the West to maximize its leverage. Navigating this new era will require pragmatic diplomacy and careful balancing of interests. The Gulf's entry into BRICS and adoption of the yuan for oil trade are signs of a new global economic order. The world is shifting from US-led unipolarity to a multipolar system with multiple centers of power. The dollar will remain important, but its dominance will be challenged by the yuan and euro. This new era brings more choice and flexibility, but also new risks and complexities. As US leverage wanes, regional powers and blocs will play a bigger role in shaping global events. Diplomacy and negotiation will become even more critical. The transition won't be smooth, competition and friction are inevitable, but the economic center of gravity is moving east, and global governance is being redrawn. The events of 2020 Yuan Sibane Despan, Yuan 20 Venster, Poistarnem, mark the dawn of a truly multipolar age. The rules of the global game are changing, and the world must adapt.